All right, good evening, everyone. Welcome to tonight's webinar. My name is Tyler Ballhorn. I am the founder of Stockscores.com. I've been a professional stock trader for over 30 years, and tonight we're going to talk about my favorite style of trading, and that is active trading, day trading, and swing trading. It's something that I've done since online trading began. When I started trading the stock market, we used to have to phone a broker. And nowadays, of course, we don't talk to anyone. We just click around with our mouse. And whether you want to do this full-time or part-time, make a living at it, or just supplement your income with it, I'm going to show you some things tonight about how I approach the market, give you a high-level overview of my approach to trading, things that I've learned over the past 30 years. I'm certain that whether you're new to trading or you've been around for a long time, there will be some things of value for you here. You're going to walk away with a sense of the tools that I use, the different strategies I employ, type of charts I look at, all kinds of different things. And I built a lot of my own tools or my own indicators for tools that are out there. So I'll show some of those things as well. All right, so just to give you a sense of our itinerary tonight, I'm going to talk a little bit about what day trading is, tell you a little bit about my story, and how I approach the market, how I measure performance, because in order to understand my strategies and the economics of trading, you need to understand how we measure performance. We do it in a way that's maybe not known to a lot of people. The tools, I'll show you a little bit, and what you need if you want to become a day trader or a swing trader, what day trading and swing trading are, what helps you succeed. And if you want to learn my strategies, my approach, I'll show you how you can do that. And we'll talk a little bit at the end about the income potential for trading. How much money do you need? How much can you make with that capital? That sort of thing. All right, so let's start with a chart. This is a 1 minute chart of a NASDAQ listed stock, the kind of stock that I love to day trade. I'm Canadian, but I tend to focus primarily on US listed stocks for day trading or swing trading, because there's more action. They tend to move quicker and more significantly. And so what you're looking at, just to give the real basics here, this is a 2-day chart. So this would be day one. Whoops, I get my, whoops, here we go. So this would be day one. This is day two. Here is the dividing line. This is 9:30 Eastern time in the morning. And you can see that through the day, it goes till the end of the day at 4 o'clock here. The stock made quite a big move. It went from roughly $5 a share up to $14 a share, and then back down to $9 a share. Obviously, a lot of volatility in that stock. Most stocks, most of the time, don't trade this way, but every day there are some stocks that do trade with this kind of volatility. And I'll show you some tools that I've created to find these quickly, find them before most people do, and then how to use different strategies for buying and selling them. So again, each one of these bars, see how it says here 1 minute? That means each bar here, which we call a candle, represents 1 minute of trading time. So if we go here, that's 1 o'clock, and this bar right here was at around 1 o'clock. This was the volume of stock that traded in that 1 minute interval, and this is where it traded in that 1 minute interval. And then if you go, from here to say here, that's about half an hour, and to there, that's an hour, right? So you can see there can be really significant moves in these stocks, and that's, of course, how you make money. However, day trading, while it is simple, it is not easy. If you are the person buying up here, obviously you lose. If you don't manage risk properly, then you can lose a lot. And if you get emotional, if you lack discipline, if you lack focus, then day trading becomes very difficult. And so one of the things, or some of the things that I'll talk about tonight, is just how to deal with yourself, the human side of trading. My webinar this recent Saturday, which is on the Stockscores YouTube channel. You can go to Stockscores on YouTube, and you can see a webinar that I did on Saturday called Common Mistakes That You Must Avoid to Do Well in the Market. And in that webinar, I talk a lot about the human factor in trading and in investing. But tonight, We'll focus more on the day trading side, and I'll try to touch on some of those things as well. All right, so let's get into it. What is day trading? Very simply, you're entering and exiting positions within a trading day. So you might buy at 9:40 a.m. Eastern time and sell 2 hours later, or you might hold all day long. But the idea in day trading is that you're in cash overnight. So when you go to bed in the evening, you do not own stocks. You are in cash, and that allows you to sleep better. That's one of the things I like about it. It's in some ways less risky because you are not carrying positions overnight. We are focusing on stocks that are moving abnormally. They're very actively traded. They have lots of volatility. When I started out trading, I used to trade the same stock day in and day out. I used to trade Dell a lot. This was many years ago. And it doesn't work. Well, it doesn't work well anyway. Because most stocks, most of the time, are pretty normal. They trade with sort of normal volatility. There's not a lot of movement up or down. And so what we want to trade as day traders or swing traders are stocks that are behaving with significantly abnormal volume and much higher volume, trading volume, than normal. These are the stocks that have captured the interest of a crowd. And there's some simple ways to find them. I'll show you some different tools that I've created to find them. And when you find them, then it becomes a matter of picking the right entry points, exit points, knowing how to manage risk, having a good process to find them, because these opportunities can move very quickly. And if you don't have good process, if you don't have good tools, then you can miss out on it very easily. All right, we can make money from buying or selling short. I tend to mostly buy if I don't think the market is going to go higher. I don't really sell short, but I will buy inverse ETFs. So if the market's moving sharply down and it's hard for stocks to go up when the market is moving sharply down, then I tend to buy stocks or buy inverse ETFs. There are ways to make money selling short as a day trader as well. But there's quite a bit of added cost to doing that. There's borrowing costs to borrow shares from your broker to then sell them short. And most speculative stocks that are quite actively traded are difficult to short because it's hard to get inventory. It's hard to get shares to borrow. And so, yes, there are certain brokerages that specialize in that, and there's day traders who specialize in selling short. But for most people, it's quite challenging. And so I tend to focus on the buy side, and I teach mostly the buy side. I do have some short selling strategies as well. I'm happy to teach you how to do it, but I think it's a little bit more of an advanced way to trade. So this is my desk at home. I've got three 43-inch 4K monitors, and then I've got 4 smaller monitors below that. You don't need all this stuff. I also run a trading service, like a room, where we run algorithms, and you can watch my computer. This screen right here is my screen that is being streamed to any of my subscribers who want to follow my analysis. And so that's my analysis screen, and then I check charts here. These are stocks that I'm watching. This is my chat window where people are asking me questions. Then I've got more charts over here. Today was a quiet day, so I didn't have a lot of charts up. And then I have this screen here for other things like my brokerage account and that kind of thing. I've closed that down. All right, so that's a sort of a layout of my screen. But I want to emphasize, you don't need all of that when you start trading. You can do it on a laptop. When I travel with a laptop, and I have 2 little mini screens that I bring with me as well, but I didn't always do that. I used to just travel with the laptop, and I could trade from that as well. It's a little more work when you have lots of screens. You don't have to move your mouse around as much because you have all of this space in front of you to do that. You can see, if for those of you that are watching this as a video, you can see behind me my setup there. And so I just usually sit there, I load up a bunch of charts, and I just watch them. And I watch the screen, again, this screen right here. I watch that during the day very closely for the alerts. And I'll show you what that screen does in just a minute. All right, so how did I get started trading? I was a university student back in the late 80s, University of Calgary, business school. wanted to make my living trading the stock market. Tried to get a job on Wall Street, had, I don't know, 20 interviews with one firm. They were going to hire me. And then it was hard for me to get the visa, or more work for me to get a visa. So I never got hired to work on Wall Street. Probably a good thing, because I ended up never really working. I just started trading. I would work as a DJ in the evenings. I would DJ in nightclubs, but also school dances, very glamorous DJing job, doing that in school dances in Calgary. And that allowed me to have my days to learn the market, trade, sit in front of my computer all day. That was, starting 31 years ago. And in the beginning, I didn't have a lot of capital. I started with about $3,000 that I borrowed off of my credit card, and slowly grew that. And then I borrowed a little bit of money from my uncle, I think $20,000. I actually lost most of it. And so then I started working for public companies, doing their investor relations, answering their phone, basically talking to investors, so that I could still trade. I could still sit in front of my screen during the day. Again, started making money again, and paid back my uncle, because I had a few good periods there. And then something clicked. I started to find success, because I realized that it wasn't just about the entry decision, which I had always been focused on. What are the right stocks to buy? What are the right stocks to buy? And that's important, but it's actually not the most important part. More important parts are the exit and risk management, and having good process, having good tools that give you an edge. So I built my own tools so I could have an edge over other people in the market. And again, I will show you some of those tools tonight. And then the market was pretty good. I turned $30,000 into $500,000 in 3 months. And that gave me my nest egg to build my trading business off. I started Stockscores.com, which has been around since 2000, 2001, and built tools for myself, built tools for other people to use that you can subscribe to, and taught people what I do. I've always enjoyed teaching, so as a sort of business that kept my website going, I would teach courses at universities on the weekends. And now I do that online, because it allows me to get to people anywhere in the world. I have students all over the world. It's pretty neat to see people from so many different countries that learn what I teach them. But ultimately, what I teach is based on what I do. I do this. I've been doing it for a long time. I've made tens of thousands of trades. I can look at any stock chart and in 3 seconds tell you whether it's good or bad, simply by practicing. And I've practiced a lot. And I can teach people what to look for. And it's not right all of the time. It is something that takes practice, but it's not complicated. I could write down the rules for my strategies on a napkin. And we'll go through some of them tonight, some of the basics. Obviously, I'm not going to give you all of my secrets. That's something for my students who buy that education. And I'll talk a little bit about that at the end of the presentation. So why is trading a great occupation? Very simply, to me, the number one thing is freedom. It allows you to make a good living, a great living, if you're good at it, from anywhere in the world. I've had the good fortune of living on the beach in Maui and living in Whistler. I'm an avid mountain biker, and so I was able to live there for a while. I now live in a beautiful place called Kelowna in Canada, where we have this beautiful lake, and there's wineries, and there's great mountain biking. And I wouldn't be able to do that if I had a normal job. I've never really had a normal job. The last real job I had was pumping gas when I was a university student many, many years ago. And then, I DJ'd for a little while, but that was kind of doing my own thing. And then I just sort of moved into a little bit of investor relations for public companies, and then started my Stockscores business and grew that, and it complemented my trading business. They really work hand in hand, because I'm doing the trading and I enjoy teaching people how to do that. It's flexible. You don't have to do it every day. I moved recently. It's been really crazy unpacking boxes and that kind of thing. So I just don't trade when it's busy, or when I'm busy with other things. If it's a slow day in the market and it's a beautiful day outside, I'd rather take my bike out I just go. Obviously, you don't make money when you're on your bike unless you hold positions, I suppose. Swing trades, I guess I'll sometimes do. It's a lot of fun. I love doing it. It's challenging. It's like a great game against some of the smartest people in the world, and you're trying to outsmart them. You don't have to beat everyone. You just have to beat the crowd. And so that's a lot of fun. And the financial rewards are significant. Like I said, when I was a young 20-something-year-old guy, to turn $30,000 into $500,000 in a few months, and it was pretty exciting. That was a long time ago when $500,000 was worth a little more than it is today. So anyway, that's a little bit about my story. Let's get into my approach now. So I'm a strategy-based trader. I don't trade on information. I don't know anything about the companies I buy. They are just a symbol, 3-letter, 4-letter symbol. I don't care what they do. In fact, I don't want to know what they do. I use math to identify opportunities based on statistics, based on my own indicators, which I'll show you on my charts in a moment. I've written my own algorithms. Well, I shouldn't say that. I've come up with the math for my own algorithms, and then I had programmers write them. I've had many different programmers work for me over the years, primarily programming for a platform called TradeStation, and I'll show you that a little bit, what those charts look like and what those indicators look like. I've also had my website built with these algorithms built into it, but the Stockscores website is more intended for investors. And of course, that was last night's webinar. And if you want to go to the Stockscores YouTube channel to watch that webinar, you can see it there. I talked about investing. The approach is very similar, whether I'm day trading or whether I'm buying a stock to hold for the next 6 months. The actual what I look for is almost identical. The only difference with day trading over investing is you have to think really quick. You have to make those decisions fast. You have to have powerful tools to find things before everyone else does. And so I couldn't find them, so I built my own, and I share them with a small number of people who are Stockscores members. So those algorithms and processes, those automated processes, I've spent, well, more than 5 years in development, and tens of thousands of dollars in programming and time, and a lot has gone into automating, not entirely automating, but automating much of the process. I used to do it sort of manually in the past, and it was fine, but the market got more and more competitive. You're trading against big institutions that have powerful computers that are right at the floor of the stock exchange. And so you have to be quick, and you have to have tools that give you an edge. And so that's what I built, and I'll show you that in a minute. All right, so I'm always about taking emotion out of the equation. I do not want to let my emotions come into it as much as possible, because emotion in trading is the enemy. If you're too emotional, you will make mistakes. I guarantee it. That was the topic of my conversation on Saturday, this past webinar on Saturday. And again, that one's on the Stockscores YouTube channel, Common Mistakes webinar. And you're certainly encouraged to watch that one. So here is a chart of a stock that we traded today. When I say we, I mean we have a daily webinar that runs every day, all day long. And during that webinar, you are watching my analysis running in real time. I talk at a minimum for the first half an hour and the last half an hour of the trading day. I sort of give you some guidance on the day. I teach. I just keep reinforcing what I have taught in my courses, and we do it in real time. There's no hiding, it's real picks, real time, and people are there every day. They can subscribe for the whole year. They can subscribe month to month. I'll talk about how you be a subscriber to that in a little bit. But anyway, on this one, this is a stock, again, Troika Media Group, TRKA. It was an abnormally volatile stock today. It's a stock that was quite hot in the last week or two, and then it quieted down, and then it came alive this morning. So again, this is a 2-day chart. So this is the open this morning at 9:30, and each one of these bars is 1 minute. So from, I don't know, say 9:40 until 10 o'clock, the stock went from 21 cents to 23 cents. So about a 10% move. Now, I don't usually trade stocks this cheap. I mean, a lot of my members like to trade these cheap stocks because they don't take a lot of capital. But for me, because of the commission structure I have at my broker, they're not the best stocks for me to trade. I tend to trade stocks over a few dollars at least. But these stocks move well, and this one did move well. And so we had a buy signal right here. There's a little pink dot there, something called an action candle, my own algorithm and own indicator. These lines at the bottom are the basis for that indicator. So this is the abnormal price test, and this is the abnormal volume test, two indicators that I had programmed for TradeStation. I share those indicators with my students so they can plot them on TradeStation charts if they desire to use TradeStation. I'm often asked, I know we have lots of Canadians here, if you are in Canada, you cannot have a brokerage account with TradeStation. And so people will call TradeStation and say, I want to use your charting service, and they'll say, sorry, we're not allowed to have Canadian customers. And the problem is that the person you talk to doesn't realize that you can subscribe to TradeStation if you just want to use the platform. You don't have to have a brokerage account with them. You can subscribe to the platform. It's $99 US a month. And then if you're my student, I'll give you all of these indicators that draw the little dots. I'll show you how to make these lines on the chart. We've got lots of different indicators. These trend lines here, that's one of my indicators. It's not something you get with TradeStation out of the box. I have to give those to you if you are my student. And so anyway, in this particular case, this stock moved up quite nicely for a couple of hours. If you had risked $500 on this trade, you would have made $3,000 profit. And I'll go through the economics of this later. I just sort of tease you right now, but I'll walk you through the economics of how that works in a little bit. So how do I measure performance? So we're going to use something called the reward for risk ratio. The reward for risk ratio is how we determine how many shares to buy and what our performance was. So I'm going to draw a little picture to start, just to make this sort of clear. Let me draw this in blue so it shows up a little better. Okay, so let's say you have a stock that's in a price pattern like this, and right here is the price of $9. And this little low point here is $8. And the stock jumps up to $10. Okay, so if I'm buying that stock at $10, and I'm going to plan to lose at $8 because that's just below support, and this is something I teach about where to put your stop loss order. The difference between $10 and $8 between your buy price and your stop loss price is $2. So if I buy one share, then my risk is $2. Now I got to pay commissions. I'll probably pay $8 in commission, so that makes no sense to do that. But if I buy 1,000 shares, well, then my risk is $2,000 plus $8 in commissions, or $5 or whatever it works out to be. All right, so the risk is the $2. Well, then if the stock goes up and I sell it at $14, I've made $4 a share on a trade where I was risking $2. So I make $4 on a trade where I was risking $2. So my reward for risk, which we call RR, is 2. Okay, I'll elaborate on this as we go through some examples, but that's the basics at this point. Now, our number one goal, and you might be surprised to hear this, our number one goal is capital preservation. Our number one goal is not to make money. Our number one goal is to preserve our capital. And I've learned that the hard way. So what that means is you always have to limit the size of your losses. And you don't want to do that by saying, if my position goes down some arbitrary number, 10%, 8%, I'm going to sell it. That's what a lot of people do. It's not the worst thing you could do, but it actually makes very little sense. So remember when I drew this picture, so we're buying here, and I said you want to put your stop just below the last inflection point. and I use the example, we're buying at 10 and we're selling at 8, well, that's a 25% drawdown. But sometimes this could be $10 and this could be $9.50, in which case the risk is 50 cents on $10. That's a 5% drawdown. What percentage drawdown is based on the volatility of the stock. Every stock has a different amount of volatility. And that's why it's a really bad idea to use some arbitrary percentage loss number, like 10%, as how much you are willing to lose. You have to let the chart tell you how much to lose. And then that determines your position size. That determines your position size based on your risk tolerance. How much are you willing to lose? We're going to go into economics later in the presentation. I'll elaborate on this a little more. So how you make money trading is not about being right. It's about how much you make when you are right versus how much you lose when you are wrong. Success rate is often our focus. We want to be right 90% of the time because in school that gets us an A+ grade. In trading, it doesn't work like that. It's really, really hard to be right 90% of the time. And if you are right 90% of the time, you probably also take some big losses. So let's go through a little example to explain this. Let's say I am right 9 times out of 10, and my average profit is $100. One time out of 10, I lose $1,500. So on the 9 times out of 10 that I make $100, that totals $900. And the 1 time out of 10 that I lose $1,500, I lose $1,500. So even though I'm right 90% of the time, because I have a big loss, I actually lose $600 after 10 trades. So that is a bad strategy. Now let's talk about a strategy that has a positive expected value. 6 times out of 10, 60% of the time, I make $400, and 4 times out of 10, I lose $100. So here I make $2,400 on the 6 winners out of 10, and here I lose $400 on the 4 losers out of 10. I still make $2,000. This is a strategy with a positive expected value, even though it was only right 60% of the time. This is more realistic and really should be your goal, your target, not I want to be right 90% of the time. And yet most people can't handle losing, and so they don't take small losses. When they see a loss, they hang on. They don't take the loss, and the stock goes lower, and it goes lower, and it goes lower, and maybe they average down, they buy more as it's going down, and they end up taking a portfolio crushing loss. And they break the number one goal, which is capital preservation. So first thing I want you to write down on the list of important things to do in the market is never take big losses. Never average down. Always know what your loss will be before you enter the trade. Plan to lose and be a good loser. The best traders are good losers. The best traders are not about making the biggest wins. They're about having small losses and being able to cap the size of their loss so that they can preserve their capital. All right. So if we go back to this example, if we are buying here at 22 cents and our stop loss is right here at 0.2127. That's what that number is right there. You might have to zoom in a little bit if you're watching this on a video or on your webinar viewer. So the risk per share, and this is not a great example because of these fractions of pennies, it's going to make it hard for me to calculate the exact size, but if I buy 10,000 shares, it'll be $2,100, and I think my risk will be $730. I don't have a calculator in front of me, but you get the idea. You let the size of the potential loss determine how many shares you buy. Okay, so let's say that was 2 cents of downside. If I buy 10,000 shares, my risk is $200. If I'm okay with losing $200, then I buy 10,000 shares. If I'm okay with losing $400, then I buy 20,000 shares, so on and so forth. So you let the volatility of the stock and the distance down to where your stop should be determine your position size. Now in this case, the stock went up 1 times risk, 2, 3, 4, 5, 6, 7.5. And it gave us the first sell signal right here on the break of the upward trend line, and it gave another one here, a less aggressive one there on the breakdown from a falling top. So if we use the second one, that occurred at about 5 times risk. So if I risked $200 and I earned 5 times risk, then I made $1,000 on a trade where I had to put up $2,100 of capital. So I made 50% roughly on my money in the course of a couple of hours. And that's without even leveraging, because you can't leverage a 21-cent stock with most brokers anyway. All right, we're going to do some more examples. This will start to make a little more sense as we do. So how does my day look? So before the market opens, and not long before the market opens, I literally do this 5 minutes before the market opens, I do a pre-market assessment and make a plan for what I'm going to focus on that day. So for example, today, my pre-market assessment looked first at the chart of the Russell 2000 index, which is a good proxy for the retail traders and what they tend to do. So that Russell 2000 ETF, IWM is the symbol, IWM. I looked at that. It's in a downward trend starting yesterday, and the market was set to gap down a little bit, open down a little bit this morning. And so it tells me then that I have to be cautious, that the market's not helping me, it is hindering me. And in a market where the market is hindering me, I really have to focus on alpha stocks. Alpha stocks are those that can go up even when the market is going down. And they are characterized by abnormal volume. So if you've been in my other webinars, you'll know that I'm big at looking for abnormal volume on stocks, and the stocks that I've shown you so far all have that. And all of these strategies focus on abnormal volume. So then I also start to decide which strategies I'm going to focus on. Now I don't change this day by day. I do it more with the market trend. So a year ago, now let's say a year and a half ago, this was my go-to strategy, the Stockscores day trader. I did this every day. When the market started trending down early in 2022, this strategy became less effective because this is a strategy for a market that's generally going higher. So I really don't do this a lot right now. I teach it, it's in my toolbox, but I pull it out of retirement when the market gets better. We are in a downward trending market generally. It's actually getting better right now, but since 2022 up until January at least, it was trending down. Now we're kind of going sideways. So now I focus on this strategy, the Stockscores IPB. IPB stands for intraday pullback. I do superheroes, which is a day trading strategy, hit and run, which is a day trading strategy, alpha echo, which is a swing trading strategy, and simple swing a little bit. All right. You can't do all of them because it's too much to do. So this is the one I'll do in the opening half an hour. And then after that, I focus on these. Later in the day, I focus on superheroes. Alpha Echo, I'll do in the opening half an hour if I have time. But if it's a busy day, sometimes I sort of cast those aside. Okay, again, our goal is to trade with algorithms, to trade with math, and to minimize human judgment, because we humans can be a little bit irrational, emotional in the market when we get anxious about our money. And so we have to take that emotion out. And I do that by using algorithms and indicators and math and process and logic. So this is my analysis screen. This is the screen that if you are my subscriber to the Active Live service, you watch this all day long. Most of the action comes in the first hour, hour and a half. There's action all day, but you find most of the stuff in the first part of the day. So for some people who don't want to sit in front of their screen all day, you could trade for the first 2 hours and probably pull a little bit out of the market every day. You see here there's different settings. So here's the IPB right here. So that's intraday pullbacks. And then here's H&R, that's hit and run. Day trader, that's for the day trader strategy. Super Alpha is how we build our watch list. Here's my swing screen over here. This is the stocks to watch list that I create for everyone on Active Live so they can see what are the priority stocks to watch. All right, now this is updating. This screen right now, you're just seeing a picture of it. But during the trading day, this is blinking and moving and it's updating in real time. And so we're waiting for signals. And so here, for example, VNet right here gave a signal at 3:02 p.m. Now, it may not have been a good signal. It's just the first step. So when that happens at 3:02, and at 3:02 I see that live, I then go look at the chart of that stock, and I have a checklist to go through to see if the stock is worth buying or not. Most of these signals I don't take, but every day all of the signals that I do take come from those lists. And so what I teach you to do and what you have to do on your own, and what I support you through, is learning what makes some of these signals good and other signals one that you want to ignore. And like I say, I ignore most of them, but every day there's anywhere from say 2 to 20 trades. In this market, a little bit slower, 2 to 5 trades typically in a day. Today there was probably 4. And you know, it's just a numbers game. You buy 10 different stocks, you try to be right 60% of the time. We hope that our average profit is double the size of our average loss. If you do that 10 times, you make money. It's a pretty simple concept about expected value. Anyway, that's the analytical screen. Down in the bottom here, there's a chart of the Russell 2000 because we're always paying attention to what the market itself is doing. It's an important factor and it affects whether we take certain trades or not. All right. So that's a little breakdown of Active Live. So now I'm going to give you a little rundown of those strategies and sort of what their characteristics are. I'm not going to go into the specific rules because that's something reserved for my students who bought these strategies from me. But the Stockscores day trader looks for entries on the 2-minute chart. It's best for a market that's trending up or maybe flat. We exit the trades before the end of the day. 80% of the good signals come in the first 90% of the trading day. So it's a nice strategy for those who maybe can't be as focused on their screen through the day as someone else might. And it utilizes the day trader finder in Active Live and or the action candle indicator in TradeStation. So here's an example of a day trader strategy. So this stock made, see this little pink dot right here on that candle? So that's my indicator. That indicator looks for abnormal price movement. And so it happened on that bar. It did so from a predictive chart pattern. This chart pattern here is called an ascending triangle. And so the computer found that in real time. So as soon as it triggers, I get an alert on my screen and I pull up the chart. And I don't just pull up the 2-minute chart. I also pull up the 13-minute chart and the daily chart. And I go through a little bit of quick analysis, maybe 3 seconds. I determine where my stop loss should be. I size my position and I'm in. And all that happens in 30 seconds. All right. And you can see the stock went up through the day. It went up roughly about 4 times risk, which means for every $100 risked, $400 of profit. If you risk $1,000, $4,000 of profit. How much you risk depends upon what your risk tolerance is. How much are you willing to lose? How much can you afford to lose? If you have $5,000 of capital, probably shouldn't be risking $1,000 on a single trade because you have a little bit of bad luck on a few trades in a row and you wipe yourself out. Remember, capital preservation, the number one goal. Okay. Stockscores Superheroes is probably my oldest day trading strategy. I've been doing this thing for 20 years, but there was probably 5 years where I didn't do it much because it just wasn't a great strategy for the market when we had a lot of focus on exchange traded funds. There wasn't a lot of volatility in the market. COVID fixed that. COVID brought back the volatility, and we've had much more volatile markets since early 2020 when we had that great rally out of the COVID crash. So generally I do this, I used to do it on a 2-minute interval. Now it's mostly on a 1-minute interval. It's really effective in any market condition. It's going to be better in a upward trending market, but you can do it in any market. As long as you have volatility, as long as you have abnormality, as long as you have stocks that attract a crowd, it's going to work great. There's signals throughout the trading day. It doesn't give as many signals. It might give, in a normal average day, it might give 2 signals on superheroes, maybe 3, some days 5, but if I'm talking about averages, 2 or 3 a day. Whereas the day trader will give a lot more. The IPB, the intraday pullback, will give more. But the superheroes, they tend to be a little bit more reliable if you wait for the good setups. It utilizes on that screen that you saw earlier on the active live screen, it utilizes the IPB finder, which is one of those little squares in that thing, and it's all automated. That tool will find the signals for you. Maybe I'll just show you this again quickly. So we go back to here. Here is the IPB finder, and so PRVB gave a signal at 2:40 in the afternoon. It's currently up 2.8 times risk. For every $100 of risk, you would buy 1,990 shares. That is a position size of $17,000 before leverage. You could leverage that, and then it would come down to $5,500. That's a bigger trade. Most of the trades that we take, the position size is under 5,000. You see some here are bigger, but they weren't really valid. Again, we're calculating these IPBs here and also here. So here's another one on RIG it did 2 signals, one at 101 and one at 241. Okay, so it's all automated for you. We don't take every one of those. Just because it's in the list doesn't mean we take them. We go through a process to identify the whether it meets the rules or not. Okay, so here's one from a couple of days ago. It made a break from a pennant pattern. It's a stock that's in play. It's got alpha. It was trading abnormal volume for a few days. So the entry price is here at entry point there at $2.82. Support is at 267. So we size our position off of that space, which is 15 cents. Whoops. 0.15. So if you buy 1,000 shares, the risk is $150. 1,000 shares will cost you $2,820. Probably can't leverage that because it's under $3. Stocks over $3 you can leverage 3 to 1, which means you only have to put up half of the money. So $2,820 for $150 worth of risk. And at the end of the day, it was up 2 times risk, so it made $300 on a capital required of $2,800, so about 10%. Not the best trade in terms of the return, but not bad either. Okay, next strategy I'll talk about is the Stockscores hit and run. This is really good for people that can only be at the market for the first hour and a half, 2 hours, because it's signals, most of them come in the first half an hour. There are the odd one that comes later in the day, but not that many, maybe 1 or 2 a day that come up later in the day. We're taking our entries off of the 1-minute interval. It works in all market conditions because it's focused on alpha. You will get more signals and you'll get better returns if the market is trending up in the short term. We want to exit these before the end of the day, but we often exit in the first 2 hours, and that's why I say it's good for, some people who have to go to work or take their kids to school or whatever. It fits with that. Utilizes the hit and run finder in active live. So if we jog back here, the hit and run finder is this screen right there. You see it says HNR. So it gives signals. You can see there's quite a few. From at 2:59, there were 5 signals. You have to take the time to look at 5 charts as quickly as you can to see if any of those are worth taking. Again, most of them won't be, but every day you get a few that are. And so you might look at 100 to find 3. You also use my message candle indicator, which is one of the indicators I make available to my active trader students. And so if you want to plot that in TradeStation, you can do that with that indicator that I provide for you. It will show you the entry signals. So here's one from today. This is JWEL, and I actually see that somebody just asked me about this stock. So JWEL gave a hit and run signal right there. And over the course of the next 45 minutes or so, it went up 7 times risk, with the exit signal here at about 4 to 5 times risk. So what that means is $100 risked led to $400 of profit. $1,000 risk led to $4,000 of profit. What do I think of the stock now? The chart's pretty good. I'm assuming you're asking as a longer term trade. I treated it as a day trade today, but the longer term chart, I looked at it today, so I can say that it's not bad. I mean, it's not great. I'd maybe rate it a 6 out of 10, which means I think it has a 60% chance of going up. All right, another strategy, the Alpha Echo. This is a fairly new strategy. It's one that I started doing maybe 3 or 4 months ago, maybe a bit more than that, 5, 6 months ago. It looks for entries on the 13-minute time frame with a confirmation sometimes on the 1-minute interval. It is a swing trading strategy. Typically, you hold these stocks for 2 to 10 days on this strategy. So it's nice for someone that can't watch the market really closely. You can maybe sort of monitor your holding, your positions from your cell phone while you're going about your day. So that this strategy works for that. Most of the entry signals come in the first half an hour, maybe first hour. And so it's good for someone who maybe can get this done before they go to work, or before they, again, take their kids to school or go to the gym or whatever you do. It's effective in any market. You'll get more entries in a hot market than you will in a quiet market. But today, I think we saw two or three of these that were pretty good. The exit is typically after a few days. Sometimes the exit's the next day. They can move fast sometimes, but the expectation is that you'll be in and out in a few days. And you can use them as a swing trading strategy. That's really the intent. But you can also play them as day trades. So that stock that I showed you earlier, the TRK Troika, this was actually an Alpha Echo that was also a day trade. So it gave a day trade signal on the Alpha Echo as well. So to find these, we use the simple swing box on that Alpha or that active live screen. And you can also use the Super Alpha screen. My indicators for TradeStation, plotting the Stockscores action candle or the message candle is how you find them. So here is an example. This is one from today, but it also did it a week and a half ago. So the entry a week and a half ago was there, and it went up over 1, 2, 3 days before the sell signal right there. So the exit is here, the entry is here. That's a move from $3 and change up to $5.50 maybe. So percentage-wise, pretty good return. And then it did another one today, so we'll see if this one works. It's not as good as this one, but I still like it. And so it didn't really do much yet today, and they often will not go right away, but we'll see if that one turns out to be a winner over the next couple of days. think it has like a 60-65% chance of going up over the next 2 or 3 days, PYXS. And then we have the simple swing strategy, which is a swing trading strategy. It's best for a flat or upward trending market. Kind of like the day trader strategy for day trading. This looks for something very similar. Typically in and out within 3 weeks, probably more like 5 to 10 days. Most entry signals in the opening hour, but there's signals all day long. And you utilize the swing finder in that active live window. So here's an example of one of those. We had this sideways range here. This is called a rectangle consolidation. We had an action candle breakout right there. That's an action candle with that little yellow dot. And again, that's my own indicator. Upward trend, break of the upward trend from a falling top. So that's your exit. That's your entry. That's roughly $5.20 to $7, maybe $6.50 in a few days. So that's a swing trade. Okay, so the economics of trading. How do we make a business out of this? It's all about reward for risk. You hear me keep talking about what was the reward for risk on this trade. So you want to try to make, in a weak market, try to make 10 times risk in a week. And in a strong market, you can make 30, 40 times risk in a week. And you don't control the market, so you just do what the market gives you. In this market, it's been a little more quiet. It's getting better. It got better starting 2 weeks ago. So it's starting to improve again. It's typical for this time of year. The market tends to get better in the spring. So, but again, if you can make, let's go through the economics of it here. If you can make 10 times risk in a week and you risk $100 per trade, oops. So 10 times risk, $100 of risk per trade, that means you make $1,000 a week. Now, how much money would it take to do that? Well, generally you take $100 of risk, you're going to need $20,000 of buying power. It's usually about times 200. To do that, because you can leverage a lot of these positions 3 times, you need about $7,000 of capital. Now I'm giving really general, high-level numbers. It depends a lot on the market. In the hot COVID market, you needed less capital because there was so much action, so much volatility. If you're going to focus on trading large cap NASDAQ stocks, then you're going to need more capital because they're less volatile. So I'm just trying to give you a general overview here. Okay. To be safe, if you want to try to make $1,000 a week, I'd be thinking more about 15K to 20K of capital. If you want to make $500 a week, then cut that in half. If you have less capital, then you can focus on lower price stocks because you don't need as much capital to trade 20-cent stocks than you would to trade $20 stocks. It's just the way it is. The more expensive the stock gets, there tends to be less volatility in percentage terms, and so you need more capital. So if you have $5,000 to trade with, then focus on stocks under $5. If you have $1 million to trade with, then focus on anything that's liquid, anything that's really actively traded, because you're going to be taking bigger position sizes and you need to be able to get in and out fairly well. All right, so it's all about how much you make when you're right versus how much you lose when you're wrong. And so when we talk about profit, measure that in RR terms. I talked about that at the top. And again, goal 10 times risk, especially when you're starting out. Once you get good at it, you start improving this, 20 times risk perhaps in a week, but you can also start increasing your risk tolerance. So even though you're only making, say, 10 times risk in a week, if you do that for a little while at $100 of risk, build up your capital, then increase this to $200 of risk per trade. Build up your capital some more, then increase this to $300, and so on and so forth. It's a very gradual, step-by-step process. It's super important to not try to go too hard on your risk. I tell all my students when they start with $0 of risk. Just paper trade, just practice in the beginning. Learn how to do it. What I teach is simple, but following it because of our human emotions, is not easy. You have to have discipline, you have to have focus, you have to practice, you have to have emotional control. It's really easy for me to say that, but I'll tell you, I've taught thousands of people over the last 20 years. That's the thing that people struggle with the most. Just about anybody can understand the rules in a day. Like, it's not complicated. But having the emotional control to follow it takes time to learn. And so that's why I say start with no risk. And then when you're successful, let's say you make on paper $1,000 or something. Okay, now start trading with $50 of risk. And then you make $1,000 at that level. Okay, now increase that to $100 of risk. Make $2,000 at that level, bump it up to $2,000 or $200 of risk. You make $4,000 at that level. This way, you are doing your number one goal, which is preserving your capital, because you're only increasing risk as you have profits to work with. Your base, your nest egg, let's say you started with 10 grand, your nest egg is safe, right? And then if you lose, let's say you lose $1,000, bring your risk down to zero and get back on track. Get some momentum, get some confidence back, and then start moving down the ladder again. Okay, so it's so important to keep that in mind. So on JWEL, entry here, support there, and if you sell here, that makes you 4 times risk. Right there, that's probably a good day, because in this market, we're trying to make 10 a day, or sorry, 10 a week. In a hot market, we try to make 10 a day. So you make 4 times your risk. Maybe you have a loser somewhere else, you lose 1, finish the day at +3, and then tomorrow, back at it again, and you make 2 times risk, and then the next day you make 5 times, and the next day you lose 2. But again, by the end of the week, you're trying to get to that 10 RR, and then as you get better at it, then you start increasing that expectation. Here's PYXS, another trade more as a swing trade. Entry here, 3 days later, exit there, 4 times risk. Okay, so you had to make 10 in a week. There's one trade that made you 4, you got 6 to go. So what do you need in order to do this? If you want to start a business full-time or part-time trading the market, you need to learn some core skills. You need knowledge. That's where I come in. I will teach you the basics of how the stock market works. I'll teach you how to analyze charts, how to be able to analyze any chart in seconds, teach you how to do risk management properly, manage your money, develop your own strategies or use mine, the mechanics of the process of how you find things. Doesn't matter if you have a great strategy. If you can't find things quickly, then it's kind of useless. You got to be able to find them before everyone else. Next thing you need are strategies. You need rules for when to enter, when to exit, how to size your positions and manage risk. Those strategies should be well tested. They should be well understood. You should base your strategy development on statistics. This is what I will do for you. I have these huge spreadsheets of all this data to develop strategies. I don't develop strategies based on gut feel or whim. I test them. I trade them with my own money before I teach them. And I only teach them when I find that they work. No guarantee that a strategy that works today is going to work tomorrow. That's why we're always trying to improve and evolve. But this is the kind of analysis that I put into developing a strategy. I have all of these statistics. So this is the analysis that I did for the day trader strategy. I had 2 years of daily signal data that I could then optimize the rules to ultimately come up with the best rules for that strategy. Next thing you need are tools. You need a way to scan the market and research. So if you're an investor or a swing trader, you can use Stockscores, my website, stockscores.com. If you're a day trader or a swing trader, best to use TradeStation. Many people use TradingView, which is also good, but TradingView does not allow my indicators to be used in it. My indicators only work in TradeStation. TradingView is cheaper, but for the $99 you spend on TradeStation, you just get so much more with it, and you get to use my indicators if you're my student. So I encourage people to use TradeStation. They pay me nothing to say that. I get nothing from them, but I've been using it for, gosh, forever, over 20 years I've been using TradeStation. It's a great program. But as I said, there's others out there, TradingView, TC2000, NinjaTrader, there's a bunch. But my favorite is TradeStation. You need a way to enter orders quickly. So you need a broker that allows for fast order entry, preferably with hotkeys or pre-programmed buttons. I use interactive brokers. Good broker, reliable, all over the world. Platform's a little complicated to use, but it's not impossible. And then you need a way to analyze your trades after the fact. I recommend you keep some analysis in Excel or even a Word document, just throwing in your trades so you can learn from them. And then I think the best tool that we can offer is Active Live, where you can watch my analysis screen, the same screen that I use for the analysis of my trades. You can watch it in real time every day, every trading day, and see those signals as they're happening in real time. Then you need process, a step-by-step plan for implementing the trading strategy. I will give you this as well, but if you don't want to learn it from me, then you have to develop your own. Should be mechanical, step-by-step, efficient. The goal should be to remove emotion. So what is the process for, say, the day trader strategy as an example? I start out the day by determining the market factor. So today the market factor was negative. I then am looking for Stockscores action candles in real time for the day trader strategy. That's on the 2-minute interval. When I get one, I check the charts to see if it has satisfaction of the other rules. If it does, I enter the trade. I monitor the trade for the exit signal. Keep an eye on the market in case I need to change my approach. And Active Live will automate most of this process for you. Capital, as I said at the couple slides ago, the general rule is take your risk tolerance and multiply it by 200. So if you're going to risk $50 a trade times 200, that's $10,000 of capital buying power. You can leverage up to that. If you have less than this, that's okay, but you're not going to be able to hold as many positions, and you're going to have to focus on lower price stocks. Lower price stocks need less capital. So stocks under $5. There's lots of opportunity there, but you definitely narrow your world of potential trade opportunities. Want to start with $0 of risk? Tradescores.com is a great place to practice. Tradescores is my other website. It has a simulator on it where you can practice trading for free. Doing it in Excel is a great way to paper trade as well. And ultimately, you increase risk with success and you decrease risk with failure. So if you're doing well, then start to increase your risk. If you have a bad streak, decrease your risk. Why? Number one goal, capital preservation. What will help you succeed? As I've said tonight, trading is simple, but it's not easy. It takes practice. Walk before you run. If you want to be successful, you have to repetition, ask me questions, listen to what I tell you. Done this a long time. I've taught a lot of people. You got to listen to what I tell you. And I say the same thing day over day after day after day on my Active Live. I repeat the same things over and over again because it takes time for people to sort of get it into their head. Not because they're stupid, not at all, but because they're normal human beings who have emotion. And I can see it in people. If you send me the last trades you did, I can usually tell you what your emotional hangup is. Could be fear of missing out, could be perfectionism, could be lack of focus. There's so many different things that people tend to do over and over again. And it's actually pretty easy to see when you watched a lot of people over a long period of time. You need determination. It's kind of like sports. It's one of the things I like about stock trading. I used to be an athlete when I was a kid, well, young adult, and I love competition, and that's one of the things I love about the stock market. You're competing against the market, and it's fun, and it's fun when you win, but you have to be determined to win. You have to have the discipline to win. You don't have to be in great shape to be a trader. You just have to be mentally strong. Don't be a gambler. Follow a strategy. Don't say, I saw someone on CNBC that said that this is a great stock, or on BNN. Don't do that. Follow rules. You can use your own rules. You can buy them from someone. You can buy them from me, but do not just gamble in the market. So how do you become a day trader? You can develop and test your own strategies. That's what I did. It took me 8 years and a lot of expensive lessons before I was successful. The alternative is to doing it yourself, is to benefit from my 30 years of experience and learn my approach from me. I guarantee you this is way cheaper than doing it on your own. It'll take you way less time to have me teach you, or someone. I mean, I'm not the only teacher in the world, although there's a lot of charlatans out there. But the quickest way to get there is to learn from somebody that knows what they're doing and who has practiced and who's done it for a long time. You know, there's kids on YouTube, especially during COVID, you know, young people that didn't know really anything about the market, but the market was hot, so they were good at picking stocks in the same way that a monkey would have been good picking stocks during that hot bull market. And so they start touting stocks on YouTube or on TikTok, and they get these huge followings. And then when the market went down in 2022, they lost everything because they don't know how to manage risk. They didn't know how to trade in a down market. They didn't know how to trade in a market that's going sideways. Any idiot can make money in a hot market. But doing well through all market conditions, that is where skill comes in. So we have something called the Stockscores Education Center. I will elaborate on this tomorrow in that webinar. I showed it a little bit last night in the investor webinar, but we've kind of run over time here, so I'm going to sort of hammer through this. But online, we have an education center where there are written lessons, videos, assignments, tests that teach you my strategies, everything you need to know to do my thing here. Okay, so that's the Stockscores Education Center. We talked about the investor course last night. We'll skip past that. Tonight we'll focus on the active trader course. You get access to all of the material on the Stockscores Education Center in the foundation section, the investor section, the active trader section. You get access to my market scans. You get email support from me. You get 6 months access to the Stockscores tools. You get my proprietary real-time indicators for TradeStation. I will email those to you when you're ready for them. Just this alone, if you had to program this yourself, assuming you knew what to do, which most people don't, would cost you $10,000 to $20,000. And I give those to you for free as part of your course. And it also makes you eligible for Active Live. Active Live is $245 a month, and you will be able to watch my analysis screen, the same screen that I watch to do my trades through the day. You get to watch that as well. Active Live is where you can watch me create and monitor the market for day trades. Real-time live webinar that runs every day. Sometimes I'm on vacation, but it still runs. I just may not be on there as much as I would normally be. Automated instant trade signals. I do the work to find the trade so you can focus on finding them or making them. And it's only available if you are a Stockscores active trader member. So this is the active live screen. I showed you that earlier. All the different functional areas for different strategies. There's a lot of information on there. Obviously, for someone that doesn't know what they're looking at, it seems overwhelming. It really isn't. It's pretty simple. We also have a mentorship program if you want me to hold your hand through the learning process. If you want to maybe learn it a little quicker, that starts May 2nd. It's limited to 20 students. I think I have to check, maybe 11 spots left. So if you want to register for that, you should email me and I'll send you some more information on that. With that course, you get 1 month of Active Live. You have to do the active trader course as part of this. So you have to be an active trader student, and that makes you eligible for Active Live, or sorry, for mentorship. You don't have to wait though. You can do it all in the same day if you want. You just have to sign up for those two things. So live training with me starts in April on April 18th. our first foundation class. Then we do another one on Wednesday, April 19th. We'll walk you through the theory. Then we're going to practice the investment side the following week, April 25th, 26th, and 27th for an hour each night. And then for those who are active trader students, you have a free month that you can use anytime for the active live service. All of these classes are recorded so you can watch them later. And by classes, I mean the foundation and the investor. I record some of this sometimes, but I don't record the whole day. I just record sort of the educational components that I sometimes do at the end of the day. Special offer, anyone who registers for any of these courses before Friday, April 14th, so the investor course or the active trader course, before Friday, April 14th at 11 p.m. Pacific time, will get all of these classes for free. Oops. You can use Active Live when you're ready if you're an active trader student, and then you also have an Active Live month for free with the mentorship course. Pricing, $2,995 for the investor course. This is Canadian dollars. I know we have a few Americans here, so it's quite a bit less because our dollar's like 35–40% less than yours. Active trader course is $39.95. If you're Canadian, you got to pay GST on these, by the way, the tax. If you're American or in Thailand, you don't have to pay the tax. Mentorship is $5,995. If you took the investor course before and you want to upgrade to the active course, the cost to do that is $1,250. If you took the active trader course a year ago and you want to upgrade to the mentorship course, it's $2,000. Here's some discount codes. Write these down because they're not going to work. Well, you have to have these codes if you're going to buy the course online. So if you want $500 off of these, I guess this too, you use these codes. For the investor course, use this code, 500 ITA23. So $500 investor course 23. If you want the active trader discount for the active trader course, 500 ATA 23. Write those down. You'll be able to watch this in a video as well, so you can do it that way. Okay, I'm going to quickly ask who wants a little follow-up. If you've already answered this in the other webinars this week, you don't need to answer this again. But if you have not answered this yet, just let me know if you want me to do a little, send you a follow-up email. It'll probably come on Friday, the follow-up email. And I'll just send you a little more information on that. Meanwhile, some questions. If we subscribe to TradeStation and get the indicators from you, can we make them work for Canadian stocks? Unfortunately, TradeStation does not cover Canadian markets. You can't get Canadian data for it. Question, on average day last March, how many trades did you make? Well, to be frank, I was moving in March. I moved on March 4th. So I haven't really been trading normally like I would, but typically, if in a typical market, I would do, depends on the market, but right now, probably 3 trades a day. In a good market, 10. I've made days when I've made 30 trades in a day, but that's kind of unusual. Do I look at level 2 data as well? I do not. Well, that's not totally true. I look at it to see if I want to take a big position. I might look at it just to see if the size is there for me to take a bigger position, but I don't use it for my entry decision. Do I ever trade futures? I used to. Actually started trading futures 25 years ago, S&P 500 futures, but I don't anymore. There's lots of action in the stock market. So in general, if you don't get a sell signal, you simply continue. I'll take this poll down. Thanks for those of you that answered. Let me just turn this off here. In general, if you don't get a sell signal, you simply continue to hold the position overnight. Not necessarily, no. Usually if it's a day trade, I will exit before the end of the day. I do have a strategy called overnight holds where I will sometimes hold them overnight. When you do that, though, you just have to be aware of risk, because when you hold overnight, there's the potential for a price gap, and you don't want to get stuck on that. So, do you teach how to trade options? I do have an option module in the course, in the foundation. It teaches you the basics of options. I am not an options trader. I don't think options are appropriate for most people. There's a lot of expertise that goes into trading options. And so I used to teach it, but I just found that most people didn't have the technical background to do it. I think they're great if you know what you're doing, but most people don't know what they're doing. How many of your trades are winners and how many are losers? I would say it depends on market conditions, but my goal is 6 or 7 out of 10 are winners and 3 or 4 out of 10 are losers. Thank you. Oh, you're welcome. All right. So anyway, there is where you register for the course. I'll just show you. Go to stockscores.com, trader training, learn how to trade. Go down the page. You want to register for active trader? Click on order active trader. I already did this last night, so I've already entered the discount code, so you can see it there. It's Canadian dollars, $34.95. You'll see here $300 yearly. That doesn't start until 6 months down the road because you get the first 6 months for free. So you don't have to worry about this, and you don't have to pay this. If you just want to cancel it right away, you can. It's just we auto renew this because most people don't want to have to actually renew it, but you can turn off the auto renewal pretty quickly. All right, so that's how you register. And there's my email address. If you have any questions, if you want me to help you decide which course is right for you, there's my email address. Make sure you subscribe to the Stockscores YouTube channel. I'm uploading at least 1 video a week, most weeks 2 videos now. Market analysis, education, it's all free. So a good place to get started if you want to. Go to my YouTube channel. There's hundreds of videos on there that'll help you get started. All right, I want to thank everyone for joining me tonight. One more webinar tomorrow, and it's where I will go more into the tools that I use. So if you're not already registered for that, go to Trader Training, upcoming events, and here is the webinar tomorrow. Stockscores tools and knowledge can help you make stock, or how Stockscores tools and knowledge can help you make stock market profits. So I'm going to give you a tour of the Stockscores website, show you a little bit about my indicators and TradeStation, my active live screen, all that kind of stuff. All right. Sorry that I kept you a little longer than planned. I wanted to do this an hour, but it went a little over. Tomorrow won't be so long. So I hope to see lots of you tomorrow night and trade well. Thanks, everyone.